day, everyone, and thank you for tuning in to the Financial Investigation Agency's webinar on what is terrorist financing. My name is Tamoji Hughes. I am the Outreach Officer at the agency, and with me today facilitating this webinar is also Pharrell George. She is the Senior Compliance Manager at the agency. Now, today's webinar has been designed to focus on the topic of terrorist financing. As DNFBPs and NPOs, you may be aware that these types of businesses are susceptible to money laundering, terrorist financing, and proliferation financing risks. But for the purpose of this webinar, we will only focus on terrorist financing and discuss key areas of the topic, such as the definition of terrorist financing, stages of terrorist financing, as well as a review of the red flags as it relates to DNFBPs and NPOs. We'll also have an opportunity for you to ask questions throughout the presentation. You can kindly just drop them in the chat window, and once we reach to that segment of Q&A, we will ask and answer those questions for you. So I will begin the presentation. So what is actually terrorist financing? Let's break this down a bit. The words associated with this term. Terrorist is a person who uses violent actions or threats of violence. This person is an advocate or practitioner of terrorism as a means of coercion. The word terrorism is defined as the unlawful use of violence and intimidation, especially against civilians, in the pursuit of political aims. Financing is the act of providing funding for a person or enterprise. So in essence, terrorist financing is defined as the act of providing financial support to terrorists or terrorist organizations to enable them to carry out terrorist acts to benefit any terrorist or terrorist organization. Now, reasons for terrorism. The UN Security Council outlines some measures on why criminals may decide to engage in terrorist acts or activities. Now, these include to influence governments or intimidating the public to accept their demands. They can also choose to do this to advance a political, religious, or ideological cause. They may want to inflict serious violence against a person or cause severe damage to property. They may want to endanger the lives of others or create a serious risk to the health and safety of the public, or to seriously interfere or disrupt electronic systems. Now, these are just a few, as more reasons continue to surface as the motives of these criminals tend to change more often than not. Now, when referring to terrorism and terrorist financing, we must also talk about the United Nations Security Council, which is a global body whose primary responsibility is to maintain international peace and security, and seeing that terrorists and terrorist financiers' main aim is to promote harm and disrupt international peace. This organization is an important part of any counter-terrorist financing regime. Now, in speaking about the United Nations Security Council, they have developed several resolutions that many countries have used in the development of their legislations to help fight terrorism and terrorism financing. Now, for example, the United Nations Security Council Resolution 1566 of 2004 refers to the act of terrorism as criminal acts, including those committed against civilians with the intent to cause death or serious bodily injury, or taking of hostages with the purpose to provoke a state of terror in the general public or in a general group of persons or particular persons, to intimidate a population or compel a government or an international organization, or to abstain from doing any act which constitutes offenses within the scope of and as defined in the international conventions and protocols relating to terrorism. Now I'll pass the presentation over to Pharrell George, who will speak to you about terrorist financing as it relates to the Virgin Islands.
Thank you very much. Good day, everyone. So you will have heard Mr. Hughes talk about the terrorist financing, what it is, the definition, and the reasons for it. But we now look at terrorist financing in the Virgin Islands context. So within the Virgin Islands, terrorist financing is covered under the Financial Investigation Agency Act, and the FIA Act defines terrorist financing as the provision or the use of funds for the purposes of terrorism, or the acquisition, possession, concealment, conversion, or transfer of funds that are directly or indirectly intended to be provided or used for the purposes of terrorism. Looking at that further, Section 8 of the Virgin Islands Counter-Terrorism Act of 2021 outlines the offence further and says a person commits a criminal offence if he or she directly or indirectly, willfully and without lawful cause or justification provides or collects funds which are intended that they be used, or knowing that they are to be used in full or in part in order to carry out one or more acts of terrorism, or intending that they benefit or knowing that they will benefit an entity or a person that carries out or participates in the carrying out of one or more terrorist acts. So, to reiterate this point, if a person provides or collects funds, whether directly or indirectly with the intent that these funds be used in any way to carry out acts of terrorism, which are basically acts that cause serious harm to others, then this person has committed terrorist financing and should fall subject to criminal proceedings. The Counter-Terrorism Act further outlines additional offences that relate to terrorism and terrorist financing within the BVI, and these include carrying out and facilitating terrorist acts, as well as carrying out terrorist bombing, dealing with terrorist property, which is defined as money or other property which is likely to be used for the purposes of terrorism, proceeds of the commission of acts of terrorism, and proceeds of acts carried out for the purposes of terrorism, as well as making any property available and carrying out any services for persons designated as terrorists or as a terrorist entity. So as DNFBPs and non-profit organizations, we would strongly encourage you to review the Counter-Terrorism Act, as well as the Financial Investigation Agency Act. These are legislations that are relevant to your organizations and to your businesses, and they will be able to provide you with further information as to your responsibilities. So, moving on to the stages of terrorist financing. For those of you who would have listened to our webinar on money laundering, you would have heard us speak about the 3 stages of money laundering. Similarly, terrorist financing also has 3 defined stages. However, the stages themselves are very different. So these are raising funds, transferring funds, and using funds. Looking at each of these in a little bit more detail, raising funds. So, terrorist fundraising methods do vary based on the sophistication and the aim of terrorist groups. Smaller groups and individual actors may require only modest amounts of money, which are more difficult to detect. Groups with a larger support base require larger amounts of funding to support their more sophisticated organizational structures, as well as their ongoing operational costs. The raising of funds for the purposes of terrorism can be done both legitimately and illegitimately. And this is a crucial point to keep in mind, because terrorist funding, terrorist financing can come from perfectly legal sources of income as well as illegal sources of income. Some avenues that persons might use to raise funds legitimately can include through legitimate businesses, private funding, self-funding, as well as through donations coming through charities and non-profit organizations. Looking at now to phase number 2, which is transferring funds. So this can be done through the financial system, for example, financial institutions such as banks, as well as other non-financial service providers such as legal practitioners, real estate agents, or high-value goods dealers. These services and these businesses may serve as vehicles for moving funds that support terrorist organizations and fund acts of terrorism. Terrorists have also used the physical movement of funds to try to avoid AML-CFT systems. This can be done by converting the money into high-value goods such as gold or precious stones, or cars or boats, which allows them to move assets outside of the financial system. The world's international trade system is another way terrorist financiers are able to move funds without being detected. Looking at the third stage, which is the actual use of funds. So this stage involves using the funds directly or indirectly to support terrorist activities carried out by a terrorist network or organization. These funds are used in several ways, from the purchasing of weapons and bomb-making equipment to purchasing technology, training of attackers, payments to attackers, or covering living expenses for the terrorist group, among several others. Some of these forms of use are day-to-day expenses, which are difficult to identify as terrorism-related, which is why having the proper training and AML and CFT controls in place is so crucial to your businesses and organizations. Before we move on, one point that is worth reiterating is that the ultimate aim of terrorist financing is to hide the purpose for which the funds are intended to be used. So, as we mentioned, the funds may very well, not all the time, but may come from a perfectly legitimate source, so which is a clean legal income. The point here to note, and the crucial point to watch out for, is where are the funds going and what they are going to be used for. And that is really the key difference for the stages of terrorist financing. Is for money laundering, it's where the funds come from. However, for terrorist financing, it's where are the funds going. So we talked a little bit about the different stages of money laundering and terrorist financing. Let's look at the differences between money laundering and terrorist financing in a bit more detail now. So we've touched upon some of these already, but there are a few key differences to note as it relates to money laundering and terrorism financing. One of these can be motivation. Persons seek to launder money for the purposes of profiting from the illegally obtained money. So any money that has been successfully laundered can be used freely by that person who initially had committed a criminal act. However, with terrorist financing, the driving factor is often to change the views and beliefs of persons or countries who have a different ideology than the ones issuing the attack. Intention is also different. The intention of a money launderer is to clean money obtained from illegal sources to make it appear as though it came from a legitimate source, so they can ultimately benefit from that money. Whereas with terrorist financing, the aim is to intimidate a population or compel a government or international organization. So we've already discussed the sources of financing as well as the methods, but it's also important to keep in mind the amounts involved when it comes to money laundering and terrorist financing. With money laundering, criminals are usually seeking to hide large sums of cash, which is why they will need to disguise the funds and the source of those funds. However, with terrorist financing, the funding and the amounts of funds may vary significantly. So it may be smaller amounts, which might be less observable, or it could be larger amounts. Unfortunately, due to the nature of terrorist financing, it can be very difficult to detect. However, your business needs to be mindful of the risks involved and the types, in terms of your particular business and organizations, what risks might be depending on what it is that you're undertaking. And if you put in place systems and controls that are relevant to your businesses and organizations, these will help your business in ensuring that you are protected from abuse from terrorist financing. So, moving on now. Looking now at the organizations at risk of terrorist financing. So this can be several types of organizations. This can include financial institutions, trust and company service providers, but it can also include DNFBPs. So businesses such as law firms, real estate agents, and accountants can act as gateways in the transferring of funds to various jurisdictions, or even aid in the purchase and sale of property intended to be used directly or indirectly for terrorism purposes. Other high-value goods dealers who are also DNFBPs, such as sellers of vehicles, boats, as well as jewelers, those types of items can be converted into cash and be used to generate funding or even facilitate the easy transfer of funds for the same purpose. Non-profit organizations, which are organizations engaging in charitable work, unfortunately can also be used by persons to finance terrorism. Charities and NPOs are a very easy way to raise the needed funds and also to transfer the funds, as they can serve as a front to avoid easy detection by authorities. It has also been shown that terrorist financiers have in the past abused the good nature and goodwill of NPOs to abuse them for the purposes of raising funds. So, how are DNFBPs and NPOs at risk of terrorist financing? They may knowingly or unknowingly provide services to high-risk customers or customers located in high-risk jurisdictions. They may engage in non-face-to-face business transactions and services which may make their business more susceptible to terrorist financing abuse, because it increases the likelihood of you and your organization not being able to fully identify and verify your customer's identity. So please note, we're not saying here doing this business causes this. What we're saying is undertaking business within high-risk jurisdictions or non-face-to-face carries a higher risk. But once you put in place systems and controls to mitigate that risk, to manage that additional risk, then you are still able to carry out the business, but it does carry a higher risk. DNFBPs and NPOs may also fail to carry out appropriate due diligence. So an example of this would be conducting standard due diligence on a customer that clearly needed enhanced due diligence. In particular, if they were residing in a high-risk jurisdiction, or they had business transactions or business associations with high-risk jurisdictions. Businesses may also fail to identify and mitigate any potential red flags. So it is important to increase your employees, your members, your volunteers' knowledge of issues relating to terrorist financing, and ensure that your business undertakes terrorist financing, red flags, terrorist financing, risk factors, training to all your staff. So everybody is aware of what they need to look out for. As well as the last point, which is failing to implement internal controls relating to terrorist financing and targeted financial sanctions. So, in addition to training your staff on identifying potential red flags, it is equally important to ensure that your business and your organization have internal controls in place. So you have policies, processes, and procedures in place that are relevant and applicable to your business and to your business's risk to mitigate any terrorist financing abuse or risk which your business might be exposed to. So we've talked a decent bit about how DNFBPs and NPOs may be susceptible to terrorist financing. Let's look at now DNFBP and NPO red flag indicators. So for DNFBPs, the types of things you may wish to watch out for might be that a beneficial owner of the account or a transaction has not been properly identified. A business or a transaction that is being undertaken through a high-risk jurisdiction, but there's no reasonable explanation as to why the transaction is being structured that way. You may have been provided with there may be use of false corporations, or you may have been provided with documents that actually relate to false corporations or shell companies. The business, the customer that you are engaging with is an individual or an entity who is placed on the sanctions list. There may be multiple high-value goods transactions in quick succession without a proper explanation as a reasonable cause as to why those transactions are occurring in that manner. There may be structuring of virtual assets transactions in amounts under record keeping and reporting thresholds, again, without a reasonable explanation as to why that is the cause. The transaction itself, the transaction structure that you may be involved in, whether it be the shipping route, the financing arrangement, or documentation, appear unnecessarily complex, again, without a reasonable cause. So really, what you should be watching out for is ensuring that when you are undertaking a business transaction, when you are involved in providing a service to a client or goods to a client, that transaction, you understand that transaction, that you really understand what it is that your business is becoming involved in, your organization is getting involved in, for you to understand that for you to reduce and mitigate any terrorist financing risks there may be in relation to that. It is worth noting that this is not a comprehensive list of red flags. Terrorists are constantly evolving their tactics to move their money. DNFBPs and NPOs should always do their research and keep up to date on emerging terrorist financing trends. Information on the latest trends can be found on the FATF website as well as the FIA's website. The FIA from time to time issues related guidance which you may find useful. So we would ask you to take a moment. To review the FIA's website. There is further guidance available on these matters, and especially sector-specific guidance for DNFBPs and NPOs. So, moving on to NPO terrorist financing red flags. So, some of the types of things that non-profit organizations should watch out for may be where donations are being received from an anonymous sources, or a payment is being sent to a source or a company or another NPO which cannot be easily identified. If there are conditions attached to a donation, such that the NPO would mainly be a vehicle for transferring funds from one place to another. For example, you may be sent a donation, let's say for $10,000. Somebody approaches you and asks your NPO, we will give you $10,000, but we would like you to send the $5,000 on to this other place or this other person. That should be a red flag. Why is that reason? Why can't they just give you the $5,000 and send them, the other organization or the other person, $5,000? So just some things to be mindful of. Other red flags that are worth bearing in mind might be that the organization or the person that you're dealing with provides you with fake or suspicious looking identification and verification documents. The structure or the nature of a project which your NPO may be getting involved in makes it difficult to identify the partners or verify their details. Or the project itself involves delegating work or funds to other parties or newly formed organizations who cannot be verified. So once again, this is not an exhaustive list of red flags. There can be many, many more. But it is important to remember that what you should really be doing in undertaking transactions and undertaking donations and giving donations is really take the time to understand what it is that you're entering into, the type of transaction, and who it is that you're entering into. So please be mindful of those. The agency will be undertaking a separate webinar on terrorism financing risks for NPOs very shortly, and we would ask you to ensure that all persons within your NPO register for this once it becomes advertised. I will now pass you back on to Timoji Hughes, who will go through some of the controls in relation to combating terrorist financing.
Thank you. So there are several ways your businesses or NPOs can help to combat terrorist financing. Some of these include ensuring that you properly verify and maintain beneficial ownership information on customers. You should also ensure that staff, members, and volunteers are properly trained to understand and identify terrorist financing risks, as well as red flag terrorist financing indicators. You should also ensure that your business develops and maintains proper AML, CFT, CPF policies and procedures, and ensure everyone is familiar with these policies and procedures. Just continue to monitor clients' transactions and accounting records to be able to identify any developing trends that may signal terrorist financing activities. Conduct and document institutional risk assessments, which should also account for terrorist financing risks. You want to conduct timely interrogations of customer databases against sanctions listings to ensure proper identification or listed persons and entities and demonstrate appropriate action is taken if such persons are identified. You want to ensure proper identification of customers' source of funds and source of wealth, as well as ensure adherence to the requirements, the AML and TF Code of Practice and Regulations. And lastly, remain vigilant. There's no one size fits all approach when it comes to terrorist financing, and we ask that you remain vigilant in conducting your business activities. Now, if you have a suspicion that terrorist financing has occurred or that the transaction or relationship may be linked to terrorist financing, file a suspicious transaction activity report, with the FIA. And by implementing these measures, you are definitely helping to combat terrorism financing locally as well as on a global scale. And lastly, if you have any questions, we see a few coming. One of them is, can terrorist financing happen between two NPOs? For example, if NPO 1 is given $50,000 by a donor, but they want 30,000 of that to go to NPO 1 and the other 20%, $20,000, to go to NPO 2, is that a sign of terrorist financing?
So I wouldn't say that is a surefire sign of terrorist financing. However, I would definitely say that it is a red flag. So NPO 1 should really ask why that is the case. Why is it that the donor can't just give them the money that they would like allocated to them and give the rest of the money to NPO 2 directly? So it's definitely a flag, and I would say take the time to understand why that's occurring. In terms of the question itself, is whether can terrorist financing occur between two NPOs? The answer is yes, it is possible and it can occur. And the reason for that is that, unfortunately, terrorist financiers have in the past, and there have been cases of this, have been able to set up sham NPOs for the purposes of terrorist financing. And it may very well be in this scenario that NPO 1 was the legitimate NPO doing genuine good work, but NPO 2 was actually set up for sham, as a sham for the purposes of terrorist financing. This is something that we would ask everyone to be mindful of. Within the Virgin Islands, we do have a regime where all NPOs must be registered and are then supervised. However, be more mindful if NPO 2 or if you are sending funds outside the Virgin Islands. Really try to understand who it is that you're dealing with and why. So if something like that occurs, don't just take the money, because it may be that NPO 1, your NPO, becomes involved in terrorist financing, and that is not something that you want as a risk to your NPO.
So why not just make the donation? Why not just make the donation?
Why not just make the donation?
On behalf of the individual.
On behalf of the individual.
Mm-hmm.
I would say be mindful. I would say have a review of the criminal offences, the terrorist financing offences that are outlined in the Counter-Terrorism Act, as it may be that if you were to take such an action, you have committed a criminal offence, and it's putting you at risk, and it's putting your NPO at risk, and of actually committing quite a significant offence. Not only does it affect the reputation, is it a reputational damage, but it will be illegal, and criminal proceedings may be commenced.
All right. That is the end of the question segment. I want to thank you, everyone, for tuning in to our webinar on what is terrorist financing for the FIA. Thanks again for tuning in. You enjoy the rest of your day.